Welcome back to Just Local. It's been a very long time, I'm sorry to say, since we've done our Just Local, but this one is going to be the quickest edited Just Local. We are filming this on Wednesday the 22nd of April, and the reason I have to tell you that is because we're here today to talk about mortgages, and the mortgage market's changing very, very quickly. So Martyn, Davies, you have the task of joining me on this project.
Excellent. Thank you.
Thank you for joining me today. Just before we get underway, can you just tell people a little bit about yourself, mindful financial planning, and any caveats and T's and C's you have to say?
Excellent. Yes, I'm Martyn Davies from Mindful Financial Planning. We're an independent financial advice firm based in Droitwich. So we're independent, so we're not tied to any providers, both on the mortgage front or investment and pension side as well. And we help people with mortgages, pensions, investments, protection planning, as well as general financial planning as well.
Cool, super. Well, Martyn, you may recognise also is the chairman of Droitwich Spa Cricket Club. He also is the founder of Milo the Monkey. We were just reminiscing on when he last came in and we were talking about Milo the Monkey, and that seems to be going well as well.
Yeah, no, really good. So into a couple of clusters of schools now. So enjoying going out to delivering that to children and understanding what they do and don't know about money, really. So it's really interesting.
Well, you're going to help us to understand a little bit more about money and specifically about mortgages, because there is a lot going on in the world, and this is why we had to get this edited really quickly, because it will date very quickly. Because right now, as we record this, overnight it's said that there's a ceasefire being extended in Iran, and also Keir Starmer is going back in for more PMQs, Prime Minister's Question Time, this afternoon. So there's a lot happening in the world.
Yep.
All of this means that you have to be on your toes, I guess, when it comes to mortgages.
Yeah, so I think if we went pre-March, everything was really positive. We were getting sub-4 rates, and it was all planning to go down and continue down a little bit more. Then the war in Iran started, so rates jumped up. So as brokers, we had to react quickly with our clients to make sure we secured the rates that we could at the time, so we didn't get any increases. And now it's just kind of really seeing what the rates are doing, keeping on top of them and monitoring them. I guess the good news for everyone listening was at the end of last week and today even, rates have started to drop with some lenders. So it's a positive sign for the markets that something's going to happen and it's going in the right way. So we should start reverting back downwards rather than upwards, hopefully. Yeah,
and these rates, they do fluctuate for a number of reasons, one of which is obviously swap rates. We kind of hear about those quite a bit. And that's about the political uncertainty, isn't it? I think that, and actually with the announcement of the ceasefire, it does kind of coincide with those rates, as you say, coming down now, but they actually stopped, didn't they? And now they're starting to come down. Yeah,
so I think we had a period of they just settled where they were after they increased, which isn't necessarily a bad thing, because it means that, yes, there's uncertainty, but we know the uncertainty, if that can make sense.
Sure.
But now we're seeing a path towards potentially a ceasefire and peace in the Middle East, or some form of peace in the Middle East. Then you'll see that those swap rates should come down as well, leading to mortgage rates coming down. There's obviously other factors across the world as well that can impact them.
Yep.
But also you've got to look at the inflation rate in the UK as well, though it's not directly related, it is part of the calculation as well when it comes to the mortgage, well, the interest rates and then the mortgage rates.
Yeah. So one of the things we wanted to have you on to discuss today is because obviously, as you've just said, the rates have been going up since March. They have settled maybe in the last week or two, but they have been going up. We've been hearing more about this own new way of purchasing, which specifically is about new builds.
Yep.
But we work with a large number of new build clients, and it is starting to creep into conversations now, because it's hopefully going to make things easier for purchasers who are looking to purchase in the market at the moment, possibly have concerns about rates that have been going up. Can you just tell me what you know about own new and how it works?
It is very new. Good news for new builds. So good there, good pun. So basically, this is where the developers are working with the lenders,
right,
to provide incentives for the people buying the properties. So traditionally, when you bought a new build, you might get new carpet, stamp duty, different things like that, or deposit contribution. Whereas this money is actually going to the lender, and that's going to help them reduce the rates for the actual end client, which is the person buying the property.
Okay.
So they'll then, what could have traditionally been, just for example, rates, a 5.2% rate.
Yep.
They could potentially get a 4.8% rate, which obviously means that will get, they call it a rate reducer, some of the lenders. So there's various lenders that actually do these now.
Cool.
All fairly mainstream, but there's some smaller building societies coming into the game as well.
Fab. So that's applicable now to a purchase. So if a rate's at 5.74 or whatever it is at the moment now, the own new product would mean that will actually be a lower rate available to them because they're buying new build using this incentive that the developers chose to use. What do you think that's going to mean to buyers? Is it going to be?
I mean, for buyers, it's good news. Obviously, it depends on the lender which you can use and which one to do it. But if you're using a lender and they have this option available, then you're potentially going to save a good amount of money on your monthly payments and the amount of interest that you pay over the overall term. So for those that were maybe looking to buy pre-March, got a bit spooked because of what happened, they could actually end up back where they were, or close to it, or at least closer to where they were before. So there's no real change for them.
Yeah, because some people have got time plans that they need to be moved in by, and unfortunately they're having to sit on a fence at the moment because they're just hearing negative press about mortgage market, which, as you said, like last 2 weeks, they probably won't be reporting it because there's lots going on in the world that's not really about mortgages. But last 2 weeks, we can confirm it has been better. But leading up to that, there's been a lot of probably negative press and concerns.
Yeah. I mean, I think we see it in our industry all the time, whether it's mortgages, pensions. You read the press, you probably think our industry is full of the worst people in the world and everything's really bad all the time. But that's because that's what gets reported more often than not.
Yeah.
Whereas when we see positives, there's nothing on the front page of the BBC today saying that 4 lenders reduced their rates.
No.
Mainly because there's probably other political things they want to report on. But if that was mortgage rates going up, that'd be straight out.
Yeah, got you. And in terms of kind of lenders, are they kind of obscure backstreet lenders, or are they kind of well-known?
No, mainstream. So I know Virgin Money have a good scheme going on with it as well.
Yeah.
Halifax are coming onto it as well.
Right.
There's loads of other lenders. There's also some smaller building societies, but they'll probably end up being more niche. So maybe some of the eco new builds, there'll be lenders that go onto those as well.
Yeah. And I suppose having different lenders, that means if you're someone who gets a lot of your salary based on commission, some lenders will take the full amount, some will take a percentage of it. So having different lenders offering will mean that you've got kind of maybe a better lender for your circumstances versus kind of the normal.
Yeah, so everyone's different in their situation. Like even if you had 2 employed people, there'll be differences in their case. So it's really important that when you're using your broker and look at the market, that they're going to the whole of market to find who actually has the best option for them.
Yeah.
So, I mean, we find it, spoke to my mate down the pub, whatever, they got this rate, which is great, but their situation will be completely different to what your situation is.
Of course. Well, there you are. That's good news for anyone that's thinking about buying a new build property. There is not just the rate that you're being offered by your bank or building society specifically, or via the broker that you're speaking to, but you may well be able to speak to your broker or speak to the bank or building society about the own new product. And I think most developers will also have their own recommended mortgage advisors, financial advisors that they can recommend your way. So worth considering. If you've been putting it off, go and have a look at the new build sites. We've got a few. I won't plug them all now, but by all means get in touch with our team and we would be happy to tell you what we have available. We've got them dotted throughout Worcestershire, lots of different developments for lots of different types of properties. Martyn, can we also now talk about what people can do to put themselves in a good position? Because there are probably, and in fact, I can confirm this because we saw it, the minute Donald Trump announced that there was a ceasefire, the market that weekend was bonkers. The staff were like run off their feet, and that's not just me blagging. They were run off their feet. So there's a lot of people that I think are just waiting. They literally want to do it. The sun's coming out, the weather's getting better. They want to do it, but they just can't. If someone's in that position right now, what could they be doing with their time? What could they do to put themselves in a strong position?
The number one thing I tell everyone to do is, and I'm not paid commission for them, so it's not advertisement, but checkmyfile.co.uk. Go on there, you can get your credit report, which shows all 3 credit providers.
Right.
It's the first thing you should do because that will show if there's any problems. So the earlier you know there's any problems and the quicker you can sort them out, the less impact it will have on your mortgage application later on. Sometimes it can be a simple thing like an old mobile phone contract that you cancelled and missed the last payment and it's created a charge on there. But you can get that sorted out and get it off your report, or at least sorted, so make it easier in the application later on. Obviously just making sure you know where your deposit funds are coming from and that they're clearly traceable. So everyone hates paperwork, but it's a necessity for anti-money laundering legislation and just making sure that we're doing the right thing. So just make sure you know you've got the bank statements, so at least 3 months bank statement showing that deposit. And if it's a gift deposit from your parents, you'll need their bank statements at some point as well. So get them ready. Pay slips and income. So if you're employed, minimum 3 months pay slips ready. If you can get your latest P60 as well for those that are on commission, that'll be important. And then simple things you can do is get on an electoral register because that's really good for your credit rating. It's a really simple thing to do. So those people who haven't voted yet, get yourself on an electoral register, and that's a really good tick point for you to do as well.
I actually went through that as a first-time buyer many years ago. Went and saw a mortgage advisor, knew I had clean credit history, as in like I always kept up to date with all my payments, but actually I didn't really have any credit history. That was my problem. And so I had to get a credit card as well.
Yeah.
I don't know if they still recommend that, but I had to get a credit card, use it, pay it back, use it, pay it back. It kind of builds up a process then for any potential lender in the future to know that you are, showing that you clear down your credit as well. So electoral roll was another thing I had to do.
And the other thing is, most people now, when you buy your mobile, and I know this, I renewed my phone recently, is that the actual phone contract is separate to the device contract now. So you can actually take out a loan for the device.
Right.
So it's actually on your credit file as a loan. So it's important that you know that if you've done that recently, because you don't want to not declare it on your mortgage application, because that could flag up as you've not told them about a potential debt.
Very interesting. And then if someone's got a bit of credit at the moment, this can impact their affordability, I guess?
Yeah, so it depends on the type of credit,
Yeah.
monthly payments and things like that. So if you've got credit, then it will knock off affordability. So there's always a way up, which you should discuss with your broker, whether you pay off the debt and have a lower deposit to have a greater mortgage capacity, or whether you keep the bigger deposit and have a lower mortgage capacity. But again, that will be individual circumstances, which will drive what's the best way to do that.
Brill. Well, look, we're going to leave it there. We could talk forever about current rates, and we could talk about Bank of England base rate, and we could talk about inflation, but the thing is, it's ever changing, and that's why you need someone like Martyn in your corner. Once you've spoken to someone like Martyn, and there are plenty of others out there, if you don't mind me saying that.
Rude.
Once you have spoken to someone like Martyn, he knows what you're doing then. And then as your journey changes, as something comes on you fall in love with, you can then get back in touch with Martyn. If the rates do change, he can tell you what the impact of that is. One thing we should say, and I've said about it on a couple of my kind of pieces that I record at home typically, the point is, if you do buy at a rate right now and your conveyancing process is going to take 3 to 4 to 5 to 6 months, the rates, what's going on in the world will have changed. So potentially the rates have got better as well. How does that change for someone who's in the process of buying?
Yeah, so once you put the application in, you normally secure the product. So if you secured it, just for an example figure of 4.6%, that's your rate unless you change it. So if the rates go up, you're protected. But if the rates come down with that provider, you can then normally switch over to the lower rate as well. So it's always good to get yourself locked in to protect against any increases. And then hopefully during the longer process, you can come down a little bit for you. But obviously that depends on the bigger global picture.
Yeah, which we can't impact, unfortunately. But at least, as Martyn said, you get your rate locked in at something hopefully that's affordable to you. You wouldn't do it otherwise. And then if it gets better, you can benefit from that. So it's well worth it. Own new product, that's the one that we've been talking about. If you've got any messages, if you want to check with us how it works, please do get in touch with us via DMs. We will then be able to put you in touch with Martyn if needed. Or we can, as we said, talk to you about some of those new homes developments where Own New is an available product. But Martyn, thank you ever so much for coming on.
No problems.
Do
Thank
appreciate
you
your
for having
time. We're going to get this turned around as quick as we can. We will come to you with more Just Local episodes. We have got a list of people we want to get on. So listen out for those. And if you have anyone looking for a property right now, why don't you share this with them so they can be updated on mortgages as well.